world's most indebted property developer with about $300 billion worth of net debt.
China's Evergrande saw its stock value drop 80% as
The embattled company has filed for bankruptcy protection in the US.
In 1996, Zhou Jiayin, alias the Belt Brother, would incorporate Evergrande, a real estate company that was registered in the Cayman Islands and headquartered in Guangdong Province in China. He would later on purchase 110,000 square meters property from a pesticide factory, upon which he constructed an affluent residential project christened the Jinbi Garden. The Jinbi Garden would be his first commercial real estate success, as the first 323 suites were sold out in half a day, and he would amass 80 to 100 million in cash flow. Whilst he would weather through the storm of the Asian financial crisis, he wouldn't be twice in a lifetime lucky, as in 2021 he would be embroiled as a catalyst in what some have dubbed China's Lehman Brothers crisis, while some experts have labeled it the Grey Rhino event, in which Evergrande, which was now the second biggest real estate developer in China, would plunge into a $300 billion debt crisis, which would adversely affect the real estate supply chain, as 40% of property developers would go into default, plunging the country into a housing crisis. Following the exponential success of Jinbi Gardens, just about 10 years later, Zhou Jiayin in October 2009 would steer Evergrande into a long-awaited IPO, in which Evergrande was now listed on the Hong Kong Stock Exchange at $3.50. The company would raise allegedly $729 million. Despite abysmal market conditions, Evergrande shares soared 34%. The IPO would catapult Mr. Zhou Jiayin into the coveted list of Forbes' richest, as Forbes allegedly claims that Mr. Zhou was paid $8 billion in dividends from the IPO through 2020. However, his ride with the upper echelon would soon plummet, as a housing crisis would wipe out 93% of his personal wealth. Diversification. Whilst Evergrande was a real estate company, it would dabble in non-core businesses. Football team. In 2010, Evergrande Group would purchase Guangzhou Football Club, in which they allegedly owned 56% majority stake, while allegedly Alibaba Group maverick Jack Ma owned 37%. The football club would win 2 Asian Football Club championships and was the first Chinese company to participate in FIFA World Cup. Reports emerged that the Guangzhou FC was once the world's most valuable club, with a market value of $3.35 billion. Allegedly. Mineral water. Evergrande would launch Evergrande Spring, which was bottled water whose water allegedly came from Changbai mountain area of northern China. Third, electric vehicles. Evergrande would rival Tesla's electric vehicles with its own Hengqi 5 all-electric compact SUV. Mr. Zhou announced that Evergrande sought to make the manufacture of electric vehicles a core business within 10 years, and the company sought to be the largest and most powerful renewable energy automobile in the world. Solar. The company would equally venture into renewable energy, with ambitions of allegedly investing $14.7 billion into a solar power plant. The company would also delve into agri-voltaics. In 2013, Xi Jinping in a speech would state that he wanted China's economy to grow steadily, as opposed to having China's growth brimming with cosmetic GDP figures. However, this wouldn't age well. Since the Jinbi Garden success, Mr. Zhou embarked on an iteration cycle, and by 2016, Evergrande was a staple, a force to reckon with, as it had more than 500 real estate projects in China. In 2016, Evergrande had amassed 373 billion yuan and had managed to topple real estate giants such as Vanke and Country Garden. The strategy. In Chinese culture, home ownership is a revered status symbol, with some families reluctant to marry off their daughters to men who do not own a home. In China, it's alleged that about 70% of the household income is tied to real estate investments, which contributes to a third of the country's GDP. Real estate investment in China was thus a lucrative venture due to a high capital appreciation. These soaring prices of real estate in China were due to 2 reasons: rise in urbanization and high demand for home ownership, and for speculation investment purposes. To meet this demand, Evergrande would employ a strategy. Evergrande would employ a quintessential model, the 3 highs and 1 low strategy, which stands for high debt, high leverage, high turnover, and low cost. Evergrande would construct more properties applying this strategy, leveraged on high debt. Buyers would scramble to purchase the units on speculation of the price appreciation. However, this strategy would lead to a catastrophic housing bubble, which would prompt Xi Jinping, Chinese president, to caution real estate investors, where he stated houses are for living and not for speculation. Given that Evergrande was heavily dependent on debt, they began to have calls from regulators to have developers reduce their outstanding debt. Banks were equally roped in a strict regulation that would limit the loans lent to property developers. In August of 2020, China's Ministry of Housing and Urban Rural Development would introduce a 3 red line policy with the sole aim of improving the financial health of the real estate sector by reducing developers' debt leverages, improving debt coverage, and increasing liquidity. The 3 red lines criteria threshold that developers had to meet was linked to their ability to borrow money. The 3 red lines consisted of 1. Asset to debt ratio. Developers were mandated to have an asset to liability ratio which must be greater than 70%. Secondly, net debt to equity ratio. The developers were equally mandated to have a net debt to equity ratio which must be less than 100%. Thirdly, cash to short-term debt ratio. The developers were equally mandated to have a cash to short-term debt ratio of less than 1. Unfortunately, given how deeply entrenched Evergrande was in debt, it would flout all the 3 criteria. This would catapult Evergrande into a liquidity crisis, as it could no longer have sufficient cash flow to complete its ongoing projects, nor did it have the finances to pay off its astronomical debt. Worse still, they didn't quite meet the threshold for the 3 red lines policy. They couldn't borrow money. The cash-strapped company, in a bid to raise cash flow, would offer double-digit discounts to incentivize the purchase of its real estate projects. The incentive was equally due to a decline in demand for housing due to the financial status of Evergrande being reported. It's alleged that the demand for housing plummeted by 39% according to Bloomberg and 33% by China's real estate information. An ominous dark cloud gathered over Evergrande. In 2021, Evergrande had more than 1,300 projects in more than 280 Chinese cities and had pre-sold dozens of its projects. While this paints a rosy picture, Evergrande would soon default, triggering a market panic. Evergrande was more than just debt-laden and more than just teetering on the brink of default. It's alleged that it had amassed a $340 billion debt. In August 24, 2021, a letter leaked to the media of Evergrande beseeching the government of Guangdong to give it latitude so that it would restructure its debts, as the company warned it was at risk of experiencing a cash crunch. Following the leak, Evergrande would vehemently deny its authenticity. However, this wouldn't mirror the truth, as Evergrande would post a net loss of $81 billion. In September of 2021, Evergrande, through a restructure, would announce that bondholders would be hit with a 75% loss on their investments. Evergrande would attempt to save face. In October 2021, amidst fear of default, Evergrande would make a $83 million interest payment on a 5-year US bond. However, this wouldn't last. In December 2021, Evergrande would miss a crucial deadline in which it faltered its debt repayment of allegedly $1.2 billion international loans. This default would have the company downgraded by international rating agency Fitch, which declared the company to be in a restricted default. Moreover, a further credit agency, Moody's, would equally downgrade Evergrande and its subsidiaries Hengda, Tianji, and Sinarijani. These reports would trigger Evergrande's stock plunge at the Hong Kong Stock Exchange. Reports say that Evergrande's share price tumbled by a staggering 80%, even plunging below its IPO share price, which triggered a trading halt. Fast forward, in 2023, the embattled real estate company would announce a debt restructure of $19 billion of offshore debt. Evergrande was warned over. As on 18th August 2023, the debt-ridden Evergrande would file for Chapter 15 bankruptcy protection in a Manhattan court in New York, which serves to protect foreign companies' assets undergoing restructuring of its debt from creditors. Litigious claims. Following Evergrande's default and subsequent bankruptcy filing, This set off a contagion effect, as Evergrande, which was the second biggest developer in China, was now the world's most indebted real estate company. Thus, Evergrande's default would pose adverse effects not only in China but globally. In China, Evergrande's default would impinge on the following sectors. 1. Developers. Reports emerged that 40% of real estate developers defaulted due to liquidity crisis, leaving a trail of unfinished projects. This would correlate to the second sector, home buyers. Irate home buyers would throng Evergrande offices, protesting following its default. As some of the projects were pre-sold, home buyers obtained mortgages that they were now on the brink of defaulting. Some buyers had equally sunk their life savings into the projects that are now desolate and worse are being demolished. Thirdly, creditors. It's alleged that Evergrande owes 170 national banks and 121 financial institutions. Following its default, the financial sector would face a credit crunch that will spill over to shadow banks, which would plunge into a liquidity crisis following Zhongji Enterprises, that is a parent company of Zhongrong International Trust, which is a state-backed Chinese company, which would default on more than 30 of its wealth management projects. Zhongji Enterprises currently has hired KPMG to restructure its debts. Evergrande's default would also impinge on an international scale, as bondholders of Evergrande, which include mavericks such as BlackRock, UBS, HSBC, would equally face losses on the investments on Evergrande.